Hey, it's Mack with PriceActionTradingSystem.com, and it's October 31st. It's Halloween Eve, and this will be our chart lesson for today. Um, Really, looks like another trading range day. We've been trending up since almost 9:30 though, so we got a good trend going here. Look how strong that EMA is. We did get a break back here from what I see. We've made a new high now. We broke out above the trading range highs. I originally was kind of looking at that for your highs, but when we turned and went up, this was your last closing highs where you get the most touches. So I believe that to be, I'm going to call that the high of the range, and I'm going to call this the low here. And you might bring this down here since we got more touches across there. Um, but we weren't quite to these highs yet, and we did have this channel working up here, and you could have even seen this channel like so, and you may not even call that a break, and so this could be the retest. So, but either way, I was looking for prices to try to take out this high when we got up here, especially when we wouldn't sell off up here. They may, what they end up doing, I'll show you this, is they end up trapping people to the short side multiple times before they can finally take it up. And that's kind of how they do. If they can't get it to go up, if they're having a hard time, then they'll suddenly try to switch the sentiment and trap a lot of people and then take it up. And they'll use that momentum to take it up. And it's amazing how you can see that happening. But let me show you what I saw. And I got several different emails from people selling this right here. There's no reason to sell this right here. Let me make sure this is clear to you. If you've got what looks like a trading range, excuse me, I'm sorry, I got choked there. If you've got what looks like a trading range, you got to wait on the second entry, and you might have got a second entry right there. You could consider that a second entry. It looked like you could consider that one, but notice how prices never broke lower there. Then you go higher, you make a new high, and so this is a little pullback. You didn't anything break higher here to the upside, but you've got a bar that couldn't go lower, so a break below that is in essence a second entry. So you might have thought about going short right there, but let me make sure you understand it's very risky buying a first entry. When you're trying to sell resistance, you're counting off the highs, and when you're trying to buy support, you're counting off the lows. So what happened here is I know at least one or two people were counting this as a second entry short right here, and it is if you're counting off the lows, but we're in an uptrend here. And so if you're trying to sell a market going up, you really need to get a confirmed trend in the other line, and you didn't get that till right here. So you might have even thought about going short here, but it's right at the EMA, right at the trend line. The first chance I saw to maybe think about going short was right here when you had a failed second entry long. Notice there's no break higher till right here. We pulled back, we came up again, made a little double top. So you might have thought about going short right there. You still had room down to here. At that point, I was looking at this channel right here coming down, and I really was looking at it being down here. I ended up moving it up to back up in here because you get more touches right there. I still think it's more along those lines right through there, but later I moved it up to here because we did bounce a little higher here, and so I'm thinking that's it now. But the main thing was you were coming off these highs right here, and you might have even thought about going short right there, but guess what? That's the first entry. Look at all that overlap, and this is what you got to be concerned about, the overnight lows. You got to have a breakout pullback short to get short right there, and then you want a second entry, and that didn't come till right here. So this was the first chance that you had to go short after we had a breakout here. And then you got the little channel working up here, but the downtrend is still in play. That was a nice trade. Somebody that I talked to was getting short right in here. Well, all these people that got short here were buying back right in here because this is where the support is. And so if you're going short down here, you're just providing liquidity for all the smart traders to get out right there. And in fact, we had a break of this short-term trend line and then a move to a new low, and we had a little trap here. We went lower first and then turned up. So, you know, I was looking to think about getting long right there. So, and that's where this person's thinking about getting short. Well, you don't want to sell into strong support like that, especially when your last swing low was here, and there's not room to get out on either one of them, because this is what happens to you. It bounces. Even if it's going to go low, it'll bounce, and the smart traders will get in back up here. And so now you've got a swing low that's lower than that one, so now your count's over. So there's a first entry, that's a second entry short on a pullback, and that's what you're looking for. And you got this strong resistance across here. You got that little one tick break higher, and it turns down. Look at that bar. It opens on its high and closes on its very low. You might have even thought about using a limit order, and it might have got filled a tick or so, but on that one, you just use a stop order. And because of the main trend channel coming down through there, you're looking for a second entry off that line, and that's the first break of that line. And it's a two-legged correction, about an equal leg, so that's a perfect short looking for a new low. And there's room to get out before you reach these lows now, so it looks so much better. And you can see it even found support there momentarily before it rocketed on lower, and then it traps all these new shorts in. All the people that got long earlier get trapped out if they didn't exit already, and then the rally starts. And that's what they try to do to you. And so you can't get fooled. You got to always be thinking a little bit ahead of, ask yourself, you definitely can't be going long at these highs right here. And I got notes from people trying to go long here, and then when they should be going short, and then you get up here and they're all trying to go short when they should be thinking long. And and right here, you got people trying to get short right in here, and they had the right idea because there was a trend line break and a new high, but you got to wait till you got something confirmed going in the other direction. The earliest you might have done that was right here, and I started to circle that, but look, it's like an up down bar. They're inside. And you just don't get a better setup until you get the failed second entry long. And even then, I almost circled this one green, but the reason I didn't was because I really liked that trade, and there wasn't, I was looking at this as the trend line, and maybe even it being here a little closer down. So it looked like a long trap to me, and I think it was a long trap, although it really had to struggle to get on down there. So, and I was kind of second guessing whether that should have been, a good entry spot, but it worked. And so I went ahead and circled that one, but this was the better trade, and even this one was better because that gets the main channel that you can see there. And I think that what it is there's probably a median line in there like usual, and that's what made it look a little different. And you can see that right there. It's kind of a median line in there, and that kind of held prices on the upper side and then on the lower side. So, but anyway, that's what I saw there. But let's start from the beginning, and then we'll come back and talk about all the trades. This was the first trade I saw. I really like this one. Prices are trending up. We've got a little trend channel here. You get a two-legged correct. That's a second entry long. You get a little bitty bar, so it's low risk. It wasn't quite back to the trend line, but at that point I wasn't convinced that the trend line wasn't there, and it may be there. Now that I move it up there, it looks even better there, and makes this look more like a break too. And then you can see it came back and tested it again. Make that larger right there, and then reverse. So yeah, I still think it's, that's where I originally had it, and that's why I really like that trade. And you did get the overshoot here, and then you get one here, and that makes more sense. And you can kind of see it crawling up that line right there. So I liked going long right there. It got just enough to get your scalp, and then it comes back and it runs the stops. And that's why we like to scalp out too, because then you don't have to worry about having your stop down here and then something like this happening to you. You're already out with your profit before it goes into this congestion. And I kind of liked going long here because it's the first break of the trend line, and notice those two bearish bars there that tried to go lower. We never could tick lower and get that second entry short that made it look like more like a trap. So I was a little hesitant with all that overlap, but it's really just like two tries to go lower and then reverses and breaks higher. And you could have tried to get in there with a limit order and it would have worked. But I just think it was aggressive by the time you had all that overlap. But there is a trap down here at the lows where you broke lower, and you did come back and test those lows again and then turn up. So if you took that trade, I think you were reading it right. It was a little risky because of the overlap, but this is why when you stay with the trend, you can't hardly, you don't have as much things you don't have as many things that can go wrong. You can't counter trend trade. And if you are going to buy, um, if you are going to buy in a downtrend, you got to at least buy the lows and not buy the highs, which is what people usually do it just the opposite. And I've had a couple of conversations with another trader, about a trade. It was very similar to this right here. It might have even been this trade. I can't remember exactly where, but they saw a trend line break and then a second entry long, and it's right at these highs, and they wonder why it failed. Well, because the trend is down and all the smart traders are selling, and they're trying to trap you in. Yeah, there's a break of the trend line here and a retest, but there's not a new low yet. There's no confirmed trend in the other direction. In fact, your trend was right here, and look at that little break and two legs up to a new high. That's exactly the trend line rules, even on that little tiny one. A trend line break and two legs up to a new high, one tick higher, and then it sells off again. And you could draw a line right here, and you get a break and a retest, and then it goes higher. So you got to draw these lines, and I'll get people that'll say, I see it better without the lines. Well, okay, I'm not going to argue with you if you think you see it better without the lines, but you can't see some of this stuff if you don't draw the lines. I mean, I look at it every day, and I can almost see it without the lines, but if I don't put them on there, I still miss stuff. So, and another thing I want to tell people is that we've been doing this a long time. And we've tried all the things that you're thinking about trying to do, and we've weeded out what works and what doesn't work. So I'm not telling you that you can't add things to what we do, but if you try to change what we do, you're probably just going to delay your learning process. It works for a reason, so trust me when the rules that we have, they work. The size chart we used, we picked it for a reason. Somebody actually wrote me today and was saying how they've been trying these different size tick charts, and they just can't find one that's even remotely as close, I guess, as the 2000. And I wrote him back and told him, I said, yeah, there's a reason why we use the 2000 tick chart, because it's the sweet spot. And we've already tried the other size charts. We've already been through that, so don't waste your time trying to change this or make it better. If you want to experiment with something, that's great, but you're on your own with that, because we've already been down that path, and I don't want to experiment or change anything. This works. We make money with it. Don't mess with what works. And even if you want to be a swing trader and not a scalper, you can use these same techniques, but the reason we scalp out is for reasons like this trade right here, because it got just enough to get out and then it reversed. And if you hadn't have scalped out and you had your stop below there, unless you were giving it more room, you probably would have got stopped out just before it went higher. And then if you gave it even more room, this kind of thing happens to you, and then it goes higher. So you still get stopped out, and you just lose more money. So what we do works. So I'm gonna get off my soapbox. I hadn't been on it in a while, so it was probably about time. But don't try to. I wouldn't spend a lot of time experimenting or changing. If you just learn this stuff and trade it every day and trust the rules and you're disciplined, that's the key. Is that a lot of people read it and they either don't understand the rules or they don't quite get the rules, and they try to change them a little bit, and then they try to argue with themselves this. I've seen this a lot lately. I see traders try to convince themselves that they were right and the trade just failed when they're just wrong. And, don't sit there and try to convince yourself that the trade is right and you just got unlucky and had a bad trade, because very rarely, if you're reading the price action right, do you get is there a failure? Generally, when you have a losing trade, you're reading it wrong. You're entering in the wrong direction, or you're entering too early or too late. And, you know, I can assure you of that. So, yeah, the biggest thing is don't be hard-headed, I guess, and convince yourself, try to convince yourself why you were right and the market was wrong. When if you had a losing trade, the odds are 99.9% almost that the market was right and you were wrong. So, um, that's the only way I know to put that, and I mean that nicely. Don't take that the wrong way. I'm not trying to beat anybody down or make anybody feel like that I think I'm smarter than them. I'm just telling you from experience that if you're reading the price action right, you don't get it wrong very often. It's very rare that it fails, and there's always clues. You may miss them, but there's always something there um, that would have led you differently. But anyway, I think the last trade we talked about was this long. Then I already explained this short. It's a failed second entry long. Um, there's a double top there. When the market is trending down, you're looking for traps to the long side. And what will happen is you'll get down here and people are looking for traps to the short side trying to get long, and they're just wrong. And, when it's moving up, they're looking for traps to the long side trying to get short. I've seen that a lot lately. When this market is going higher, you're looking for the traps down here on the low side so you can get long and go with it. And when it's coming down and it's in a down mode, you're looking for traps to the long side so you can get short. That's why you see all the shorts up here this way, and now that we're going higher, you can see all the longs. You don't see any, there's several short traps there, but you don't see any shorts there, do you? Because that's not what you're looking for. Most of those short traps are going to fail. Or long traps that are setups that look like long traps, most of those are going to fail and turn into short traps. Just like right here's a perfect one. This is a really good one. Look at this. You got a new low, you're working up, you got a first entry long, pull back a second entry long right there, and it turns and reverses and closes down here, and it never broke lower, so hopefully most of you didn't get trapped. But I could see where people would try to go short there, and then guess what? Look, it goes and makes a new high. Same thing right here. You got a new low, you got a first entry short, you pull back, you got a second entry short right there. And then you got this little move up. It kind of traps people. You can see that big bearish bar, and they're thinking, oh yeah, I'm going to catch that. I'm going to pick this top. And then guess what? You get burned. When it's going up, you're looking for the traps to the low side so you can get long. So I hope that's very clear to people, because most people are doing it backwards, and that's why they're losing. The number one rule is don't counter trend trade. Don't take shorts. Just like right here, there's some short setups here, but you can't really take one until you get a confirmed trend. And there's even I didn't end up putting this on here, but there's even a shorter term trend here, and it fits even better. And that's another reason why I kind of like that trade right there. And if you copy that one and you put it over here, it fits much better. It still fits. And so I originally saw that one too, but there's like 3 different ways you could see this, and you can see multiple people saw them all, because you got the break of this one, a new low, and then you got the break of this one in a retest, and then you got the break of this one in the retest. So there's really 3 different trends in there, and who's to say which one of them? They're all right. They're just at different levels. And but the main thing is the trend is down, and you got to be careful going long in here until you get a confirmed trend. And then once you keep bouncing and turn it down, it's a trading range, and then you're on the trading range rules. And that's why I kind of like this long here, and that's why I like this short here plus the bigger channel. And then that's why I like longs all the way up here. So I hope that makes sense to you. But this is a 2-legged pullback in a trading range. It's 2 legs up to the high, and then you go short. And then there's really 2 legs down here. There's a move down, there's a little doji, so that's a little correction. And then you get a little failed break lower right there. So you might have thought about going long there, but look, it's a doji, there's a bunch of overlap, and it gets all hung up, and by the time you get another setup, it's way up here, and it's just too risky. Even though it worked And that's why I drew that one in purple, because you don't want to be going short here really. You might have even thought about going short, but it's still not a very good setup. Excuse me. And then you get trapped short really, and it takes it a while when it breaks on higher. And then I'm guessing a bunch of people might have gotten trapped short here, but you can't go short out of all that. You definitely don't want to go long out of that. So the only way to go long is at the lows of this. This is just another little tighter trading range. Let me draw the line so you can see it. And that's what I'm always talking about drawing your lines. And you can kind of see those lines across there. I probably would have had this right across there, maybe right across there. And so it's just a failed break lower, and you got to wait on a breakout pullback short, and you never got one there. It's just a tight trading range, and it fails out the bottom, and the bias is up because we traded into this, so that's another reason not to go short. And then it tries to pull back, and you get that failure in that trap. And so, and this one was, originally I had that trend line right there, but I ended up moving it down a little bit right here, and then we bounced there again. Either way you drew that, you probably still came to the same conclusion. But originally I had it a little higher, and so we bounced off of it once and again, but it's really two bounces off of the EMA as well. And so I kind of like that trade right there. It's a second entry long, and you had the little trap down here because you had those lows, those two little matching lows right there, and we went one tick lower and then it turned up. If you entered here, you got to use a limit order. It's always better to wait on the second entry, and you get that repeat pattern up here, right here. Where was it? It was right here. Yeah, you come back down and you're moving down, so you got to wait on that little pullback. It's almost a perfect repeat pattern, and so I hope that makes sense to you. This was just a two-legged pullback to the trend line. Nice bullish bar. Really your signal bar was a break above here, so, but you're better off to wait and enter here on a stop or try to get a limit order, and that's a bullish bar. It closes on its high. You better use a stop on that in an uptrend, especially when they probably got a bunch of shorts trapped there. And it took it a minute, but it went on up, and there's a second entry right there. Tried to go lower again, and it bounces right off the EMA and another bullish bar. But I like, because it went lower first, you just wait on it with a stop, and it went straight on up. And then it you were able to scalp out of that, and then it pulls back. No runners here. You would have gotten some runners down here if you were aggressive, but you didn't get any here. And then guess what? You got a first entry short, pull back second entry short, and you got all these, again, the same people that probably got burned here get burned here, and it goes higher. I thought this was too risky here because we didn't go much higher. We're getting real close to the highs. We're not quite there yet, but and there is a little trout, but by the time it triggers, there's a lot of overlap, little tiny bars. So I just didn't like it as much. And there was also the possibility that we did have a trend line break and two little moves up. So I didn't like that setup as much, and so I marked it in green. It's still valid if you want to be aggressive. And then I already talked about why you don't want to enter in here. We've already had a possible break, and if you didn't, you got one here. You got a failed second entry long. Actually, you could count this either way. It could have been a failed second entry long there or there, because you can count a double bottom both ways. And so, and you don't want to enter above this negative, very bearish looking bar, and you never really get another chance to enter because it's going higher. Now it's coming back. So and that's what I saw today, but I hope most of what we talked about makes sense to you. You know, just remember, if we're in an uptrend, you're not looking for traps so much to the long side until you get up here on a range day and it's a lot of resistance. But even then, you got to be careful. You're mostly looking for traps to the short side so you can get on with the trend. And here we are, we're going higher. So you're not looking for traps up on the high side. You're looking for traps to the downside so you can get in with the trend. and right here you're coming down. So no, you're not looking for traps down here on the short side so much. You're looking for traps that allow you to get short. So make sure you understand that. Watch this video a few times if you need to. And this is a good example of what a reversal pattern looks like. You got the trend line break, move to a new high, then you come down, and notice how there's no rejection at the, notice how every time we got to the EMA up through here, there was rejection except for right here. And even then it finally did reject it and go higher, but it's because of the trap really. It wasn't because the EMA was rejecting it. But notice what happened. This time we came back to the EMA. It goes straight on through and doesn't even check up. That's what a reversal pattern looks like. And look how it's making lower lows. I mean, that's a nice move down. And notice there's a second entry short up here too. It's out of congestion. But notice the new high. See, and you get people that try to go short right there, and then it comes back and traps them out, stops them out. But here's where your second entry short triggered. And so you might, and it's like a little breakout pullback short right there too. So you might have thought about going short there, and that's the only way you could catch that. And you can't take that first entry, which probably would have been, that's really your first entry short, but it's not a good setup. And if you wait on the first bearish bar and go short, it's right there, and then but it's all that congestion, and what happens, it normally snaps back and then turns into a breakout pullback short, which happened right there. So if you're going to enter, that's where you got to think about entering. And you know, the trader that sent me the message and wondered why this trade failed right here, and they thought it was a second entry, or actually it was this one right here, and they thought it was a second entry, and then it turns and goes higher. Well, that's the whole idea, is they want to get you in on the wrong side and then run your stop and then let it go where they want it to go. So wait on that second entry, counting off. If you're trying to enter off the highs on what you think is a range, which might have been right across there, wait on the second entry short, and you really don't get one, a good one here, and you might have considered that one or that one. But you can't enter on the first one. And then same thing here. There's your first entry short, and your second came right there, but it's, you know, it's not a good setup. So, you know, then they've got the slightly smarter traders trick there, and then you get the really smart traders that all jump in there. And that's how it works. And that's the whole idea. Same thing coming down. You got the early birds that think they're smart and think they outsmarted the market trying to get long, and it looks real good, and then suddenly they just stop buying, and the bottom falls out up. They all get their stops run, and then it goes exactly where they thought it was going to go to begin with. So don't be early. Don't try to trick tops and bottoms. Wait till you get a trend in the other way, and that was really right here. You can see how all these bars are trending higher. They're not really going a whole lot higher, but they're making higher lows, and there's kind of a trend. That's where you usually get your trend bar. Just like I got it right here on those two, and that's a short-term one, but there's still a little trend there. If we'd have bounced right there again, you might have thought about going long, but you still had to think about this trend. I'm not too convinced about that one, but obviously some people saw it. We turned down off of it, but I'm not so convinced about that one. Just get it out of the way because it just kind of clutters up. But you had that one, and then you had the little trend going up, the break, two legs up, and then you can see that little trend right there, the break, the retest, and it couldn't go. It tried to go lower several times and couldn't, and then it goes up, and that's really steep there. But anyway, that's about 30 minutes worth today, so I hope you learned something today. But I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.